right now, we did actually analyze this in the Discord server yesterday. We do weekly group calls now that I'm back from Brazil. I was there for a month period, so I wasn't really looking at any charts, to be honest, or even updating the chat, but I'm now here permanently, don't worry. And we did our weekly group call that was about 1.5 hours, where we delved deep into Bitcoin and also looked at some altcoins like your Agix. And we were seeing, when analyzing this, that a target had been met. So that's a positive thing, because it's at least going to give us a short-term reversal. And we've got some bullish signals as well. So we're going to look at all of this today. But please don't forget to like, subscribe, comment, and enjoy this video update. Thank you, guys. So I've placed my fibs from the lowest point to the highest point of the pump. So of course, starting from, if we're measuring a pump, it needs to be from the lowest point of the beginning, and then the highest point after. Some people do tend to place the fibs wrong. So that's something that I do, of course, teach. But essentially, after topping out, you just need to wait for bearish patterns to form, or failure to break highs, or lower highs and then lower lows. So we drew a neckline over here because we met a high, formed this low, and then formed a lower high, lower than this high, lower than 67 cent, up at 59 cents, so just short of 60, and then we eventually lost this neckline of the pattern. So this would have just been considered a double top pattern. I'm not looking at divergences right now. We will look at some, because that's the bullish signals that we are getting currently. And we can see that this M pattern's neckline was lost. We got the target over here and the target being met. If it was slightly missed over here, so it gave us another opportunity to come back down, and we finally met the target on this red candle over here. So when the target is met, you need to see where in and around it is at, and we can see that is slightly above the 0.5 Fibonacci, but we can see to the left over here there was some support a little bit above it. So we've created this box, and we can see the top of the box is also the target out of the M pattern. So the specific chart pattern's target has been met, and we're, in the last days just been consolidating in this area over here. And in today's candle, we are up 3%. So if you traded just today's candle, well done. You would have made 3% with any leverage. It would have been much better than that. No worries if you didn't. We're going to look at some divergences right now to see if there are some. But I've already checked, because we analyzed this yesterday. And we do, as of now, with the bodies, you can see lower lows. Even with the wicks, we can see lower lows with the wicks. But on this indicator over here, we're actually seeing higher lows, where this cloud over here, the lowest one, we got two after it, but I want to look at this point over here. This is the significant point, not this cloud over here, this significant point over here. So we got lower lows, but this cloud and this cloud, you can see that this one is slightly higher than the one to the left. So we've got a disagreement in the chart, where the chart is saying we've got lower lows, but this is actually showing higher lows. It's a bullish divergence. We're also almost at the golden pocket. So if we were to bounce, you know why. However, something really important, we can see that the 382 over here was once a support, lost, confirmed as resistance, and then dumped to this area. We also see to the left, it was resistance, and we dumped to that area. So if we then pump, that is our resistance. This is our resistance, what was once support. This is our resistance. It is the 382 fib at 22 cents. So the expectation is, even if this bullish divergence does pan out, the plan would be, this is resistance. If that changes, I'll let you guys know. We then get a pump more towards this neckline again. But for now, if we do pump, we've got the 200 EMA here, just slightly above the 382. So it's basically saying that this is a key level resistance. We should get rejected over here. And then we need to see after that point what the signals are. Do we then hold a higher low, flip this resistance into support, have another go breaking out, coming up to 33 cent, or do we hold the 382 as resistance and then dump and come down to these targets to the downside? Because although we have met this M pattern's target, we're just going to show you a few more things and then we're done. We've got another neckline over here, and you can see that it's been lost. I'm going to draw a parallel channel, because in most cases you can see with my supports, don't like using specific lines. I like using boxes, so areas of support and resistance. So I'm going to use my parallel channel, go through these 2 points, and then drag it down so I'm catching these wicks over here. And so we can see that this was a neckline of a shoulder, head, and shoulders pattern. And basically we lost the neckline, confirming, giving the chance for this to play out. retesting it as resistance. This is the confirmation, and then we're now heading down basically. So I'm going to get you the target just before we end this video. I'm going to get the more conservative, going from the body at the top back down to the neckline, and on the breakdown over here we're seeing a suggestion that it could come down to this area. So it might be we're getting that bullish divergence with the lower lows but the higher lows on the indicator, come back up into this key level of resistance, whether we find support here and go up to there, or it fails and we just come back down lower. That would be your next set of targets. I'm not a bear, guys. I'm not a bear. I'm just a messenger. So I'm basically just trying to prepare you guys. I'm not a perma bear. I'm not a perma bull. I'm just sending you the messages that I'm seeing, so that, you know, if you are one of those that think it's up only, just bring it back down to reality, just to show that there might be chances of going lower. Although right now we are holding this as support, the first step is a pump. So right now, in the immediate short term, I'm expecting this pump and then run into resistance. From there, we need to see the reaction. As we saw to the left, it was resistance. It can be totally ignored and we reclaim it all, and we do actually go lovey-dovey all the way up only. But I'm just trying to prepare you for the worst case if it ever does come. And yeah, we would be looking for that head and shoulders target in and around this 10 cent area. Thank you guys so much for tuning in. Any further assistance, follow me on x/twitter.com. All the links are in the description down below, whether you want to go onto the website and join the education and get 3 months free in the chat, or just join the Discord chat anyway. We've had a few people in the last couple of days join. So yeah, if you want to be part of that, you know what to do. Reach out to me or just go straight to the website. All the links are in the description and pinned comment section below. Cheers.